The world of cryptocurrency investing is filled with many lies and fictions. It can be hard to decipher what the truth really is with all the noise in the markets. To succeed, you must fully know and understand the truth. The reason this is the case is because in order for you to understand market dynamics and see what is really happening beneath the surface, you must see reality exactly as it is. Hopium and panic are caused by investors believing in false narratives that cloud their judgment. In this video, we will go over several truths every investor must know in order to remain calm and collected in a highly emotional market. Truth 1. The market doesn't go up forever. During a bull market, it can seem as if the market will continue to rise forever. When prices on nearly all assets are skyrocketing and investor interest and sentiment is reaching all-time highs, it can appear that prosperity has come to stay and that the good times will continue to roll on. The harsh reality of life is that the positives are always balanced by the negatives. The more that the market expands in an upwards direction, the greater the inevitable correction will be. It is impossible for the market to continue to grow forever because eventually prices will become too expensive. Assets will reach levels of overvaluation that are not sustainable. The stock market and crypto market are very similar to the game of musical chairs, where someone is inevitably left without a seat at the end. Likewise, in the markets, there eventually is no one left for retail investors to sell their assets to at a higher price. In this scenario, prices inevitably tank, and as market sentiment changes to the negative, a capitulation event eventually takes place where retail investors run towards the exits. Truth 2. No one has a crystal ball. It is important to realize that no one has a crystal ball and no one is capable of flawlessly predicting the future. Anyone who claims that they know is lying to you. Influencers have come out with many models and methods of trying to predict where prices are heading to. The fact is that many of these rules have no basis in reality and a majority of them only exist in a world where all variables remain perfect. In the real world, anything can occur that can shock markets. Once black swan events come along, every single technical analysis expert begins to say that TA is no longer applicable because a black swan event occurred. The truth is that they really don't know what they are doing. If they knew how to predict prices or how to become a profitable trader, they would not be selling programs, tweeting predictions, or creating paid groups. Truth 3. Technical analysis cannot predict the future. Technical analysis is meant to be used as a tool, not as an investing formula. There is no one-size-fits-all approach to investing success. The markets are one big game of chess where every player is out for him or herself. The masses of retail investors look at support and resistance levels on charts and know about Fibonacci levels. Institutions and professional traders countertrade the masses and use them as exit liquidity. There is no way the masses can win following a standard approach. Technical analysis is viewed as a standard approach within the investing community and is the education that influencers, educators, and the media use to trick the masses of investors into making the wrong moves. Truth 4. The majority of investors don't make money. It is the truth that most retail investors fail to become profitable. This means that if you follow the same narratives, influencers, technical analysis guides, and methodologies that the majority of investors follow, you would be doing exactly what not to do. In fact, doing the opposite of the prevailing narrative is generally a smart idea. If you are wrong, you will tend to have many other people by your side who agree with you. If you are right, you will tend to be the lone one out because you are going against the grain. It is imperative to know where you stand amongst the rest of your peers. In conclusion, by staying true to the basics and seeing reality for what it is, you can forge a disciplined path to investing success. To become a great investor, you must realize these truths and apply them to your critical thinking process when making investment decisions. If you enjoyed this video and found it educational, make sure to hit the like button and subscribe to my channel. I'll see you in the next one. This video is strictly for educational purposes and does not constitute financial advice.